So this is the video that I was telling you I'd make just so you could see the 50 EMA stuff and what it does, and that to begin with, it was an update. It opened up, I think it opened up 125 or something. I think it was a lot. You can see right here. I mean, it was 70 40, and nah, it only opened up 40 high. But anyway, it opened up 40 high, then it just climbs and climbs and climbs and climbs. I'll put a call over here on the right side so you can see. Well, let me go over this first though. Okay, we'll go over this. Buying these bounces on these swing indicators here, the dark blue ones, is where you gotta learn this pattern, what it does, and you go right here, so you can see where it goes up, exponentially compared to other ones over here. But that's you got to get her into a rhythm, because this starts to come up like this and like this and like that. And you see the Elliott waves, and it climbs up to this one. Then it's a shorter one that climbs up to here, then kind of goes sideways, and then it starts bouncing again on the blue ones, and they start showing up, and you get it. This is where the one, I think this is where the one trade, the 34,000 was right here. And I think I got stopped out right here, but I'm pretty sure that's it. Anyway, it's just is what it is. But anyway, let me zoom out a little bit here. It went up and up and up and up and up, and it gets up to here, then pulls back, kind of goes sideways. So there's nothing to do right here, because even in a put, you're not going to be making hardly anything, you know, right here. This is the put, and so you can make this little bit right here where it pops back up here, or it pops back up here. But these are really, and they're not worth it. It's only $1 movement, and it's a rocky movement too. So that's right around, that's before 9 a.m. I like to have it unwind and clear. A lot of people trade right here, and I don't know, man. It's freaking really, they trading this shit like this. That one SPX Godfather guy. This is where he freaking trades. All the way until, I don't know, maybe 9 o'clock. It's just nuts and crazy, and man, it's jackknifing everywhere. I don't want to trade there. I want something more solid. That's you know after 8 o'clock. See about right here. This is all jagged and a mess. But then after 8 o'clock, it caught this one, 7:15. That's a good move if you can catch it. But you don't know where it's going, and it just dropped over VWAP too. See that? It just dropped over VWAP. You're gonna really, that this is one of the things you got to really realize is when it gets outside the VWAP bands, it's going to snap back. The problem is you just don't know how much it's going to snap back. And even if it does snap back a lot, you know, you can make a lot of money here because it is so volatile and things move fast, but they also move fast. You can be upside down in a heartbeat. It just, and it's never going to go much further than maximum. See what this thing did? Comes up, stretches above the second upper band, comes back to VWAP, goes up across the second band again, and is riding above the band, and then comes back to VWAP. That's a VWAP. I'd consider that a VWAP bounce because it didn't bounce in the first. It didn't bounce in the first standard deviation. Then it goes back up here, and then it comes all the way to the bottom. And it's just like, if you caught this move right here on a call, it'd be a really good move. It'd be really good. But man, I don't know. I don't like it. I'm not even awake by then to freaking do anything. You know what I mean? It's like nuts. I don't know. I don't like it. So I just wait for all this to unwind, and then you eventually see whether it's going to be above VWAP and start to ride up, or it's going to go down. And once it gets past 8 o'clock, it's going to go down and stay under VWAP, and then try and come back up, or it's going to go up like this, like it does. And you just learn how to trade this. You got to buy here, get out here. You got to buy here, get out maybe here. You gotta buy. Really, the best place to buy is on the blue indicators right here. The dark blue indicators all the way up are the best thing to buy. It's hard to turn them on and make them, but as you can see, you know, and you really got to learn how to do the bounces, because it's not going to go much further than here. So when it gets down here, the first sign that it's going to turn around and go back up, you got to get out. If you just bought the put, and then you got to buy the call if you're or you got to buy the call just sitting here waiting for it to go to the bottom, and then buy the call and ride this up maybe to here, somewhere in here for, I don't know, 4 or 5 minutes, from here it's 7:48, but it's really volatile, man. You don't know where it's going to go. Yeah, it's easy to say, oh, it got down to the bottom and went back up, but that is so hard to catch right there. And if it goes back up to VWAP and comes back down, you'll be underwater before your head will spin. It's just not worth it. So this is what I like, is just start doing this. You're following along, and it's an up day, and it's stretching above, and see, there's a little short consolidation here, comes down, bounces. If it bounces here, you wait for the next bounce. So it goes up, and you wait for this bounce, and that's where you get in. Then you ride it as long as you think you can. And I look at the 100 tick too. It's really good. Sometimes I'm looking at the 10 tick, but it can be tough to watch the 10 tick and 100 tick and everything. And it's, I don't know. But I caught a couple of these, like here, bounced here, went up to here somewhere, got stopped out, bought another one. I remember buying this one and then getting up here and then it goes sideways. I'm like, shit. So, that's pretty much when once it starts going too far sideways here and comes back to the standard deviation line, then it's like slowing down, and you're after 9 a.m. here, or after 8 a.m. right here. And so, you're bouncing up, and then, it goes, so you hang on and wait, because, you're not 10 o'clock yet. Then it goes around, consolidates, and goes underneath the line. You just need to watch and just watch and see where this thing goes, because it doesn't go very far past the line. And I know the line is calculated off the price, but still, it gets out here and it snaps back. And you got to put a stop loss on your strike that you're trading, or you're just gonna lose your ass. So, um, let me move this. This is a call. It's just one I had hanging out there. I was thinking about trading it probably, but anyway, you can see. Find out where I am now. So back here, from all the way down here at the bottom where right here, right here, it's up, 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 but it's a slow grind too. It's not this pop up right here. It's not this spike. And I mean, you can trade this, but it's really tough too, because you got to realize when it drops on the index, which drops on the on the futures first, then on the SPX, then it exponentially drops off here. So you got to be really careful. You'd be underwater. You got in here and you're up $4, 5, $6,000. If you don't get out here and figure out where to get out and when to get out, if you're stretching clear out here and you don't watch this VWAP band standard deviation bands. You watch on the index. So you can see where it's stretched out here and where it was there, and then it snaps back. It snapped back and luckily got some support here, and then just consolidated sideways, and you can kind of see what it does. So you gotta wait. You really gotta wait. If you get in right here, see where this is? Now what happened right here? It got in, it went up, up, you're still bouncing up and down, but as long as you're riding the 9 or the 9 or the 20 or the 50 here, because you'll see, I'm sure Mark, watch enough stock, the 9, it rides the 9, then it'll pull back to the 20, and then it'll ride the 9, pull back to the 20, and then it'll pull back to the 50, and then it'll pull back even further, and that's where you go in the consolidation, blah, blah. Well, what I'm trying to catch is this right here, these spikes right here, because you're not in very long. You get driven nuts. Well, this might have been the trade that I got into too early on the $34,000 one, I think maybe. It looks like it because it was a long time, man. It was going sideways for a long time, up and down, up and down, up and down, up and down, and it was grinding up. But you know, that spike right there is what I'm trying to catch, because it's just you get in to get out, and then you go, you set a take profit target, and you can usually get out with a stop loss pretty high, or look how long that wick is though. If your order's up there and it crosses it, it will you know place it will execute your order and actually take profits right there. But sometimes you're up here. So if you're up here and you keep pulling your stop loss up and don't get stopped out way down here, then make some good money. But I got in somewhere in here and it was grinding, 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 grinding. So it's if you look at this, it's going way up, but your strike's not really going up because it hasn't gone. It did go sideways for quite a while. I don't know why that didn't go anywhere for quite some time, but that's what it does. It winds up like slingshot, and then the slingshot lets go, and that's what you get. And then I'd rather sit around and snipe. I don't know where. This is a really weird place with no support. It's got no support, but that's where it really took off. Is right there, right here. I don't know why it did, but it was just working its way up. For some reason, the strike was being held down right here while this is going up. It doesn't look the same. So see how it doesn't look the same? And there's no spike right here either. So I don't know. I don't know. Let me see if there's a spike on the. Well, there's not really a spike on the. I don't know why this spiked, but it did. But I got it in the bounce, and it kind of went sideways, up and down, up and down, up and down, up and down. Came up a little bit, came back down. I I think I might have gotten stopped out on this one for 1,000 or something. Then I think I actually got back in. I'm not sure. Anyway, this is what I'm trying to catch, or this right here. And then let me pull up the put again, because it's this. I mean that other move was 250 and then maybe at 180 to 4. So it's still not. There weren't good long or high dollar trades today. The standard deviation is widening now with more volume every day, but as you saw earlier, man, it was way tight to begin with, right there. I mean, this is nothing. This is like from 81 to 90, 7,100. So $19. It's only $5 in between here. It's only 50 cents movement on your strike. It just it's unless it moves fast, you're not getting anything. And then when you pull back and go up, you got to catch these bounces to do it. But anyway, then it went up there, and then goes sideways, sideways, sideways until afternoon. Goes up a little bit more, and then this is the move. This is the big move, which was this big move. It's not that don't. It's only 2x. It's not that big of a move. And then you got to be at $4 too. So you're only making 30% on your money, probably. You know, that's the bad thing about the last month with the war. It's been lower volume, so it's really tough to. It's really tough. You got to be a lot closer to the money. Hopefully that doesn't ruin the audio too much. I didn't think about that. Anyway, here's the most important place anyway. Over the 50 or under the 50? This red line right here, this red line is the 50, the thick one. The skinny one's the 9. So 9, 20. Sometimes I use a 35 for this yellow, but it doesn't matter. Different charts have different ones, different 35 or 20. But anyway, you can see, and I don't know that every strike acts the same and goes over the 50, but you can see here, let me see where I am over on the right hand side, and notice where I am on the left hand side. I'm about to go over the 50. And right here, where the hand is, I'm about to go under the 50. So this is obviously a put. Buying the put, value goes up. And if you look at this, it's fallen over the 50. And what it does, I mean, all you got to do is sit around and wait for this to happen, and it falls off a cliff. You can see that. It just fell off a cliff. Now, it didn't fall off a cliff like it does on most days or a couple months ago when there was a lot of volume, because there's not a lot of width to the standard deviation. So let me get through with this. Anyway, here's the 50, the thick dotted line, red dotted line, and what happens? The price comes under, but it doesn't bounce. It goes back above. This is one of the key things. It's either got to bounce. If this candle goes way down, then you got to pull back here. Then you jump in. If not, like it did here, it pulls back and bounces off the 50. From there to there, that's a bounce off the. This is not a bounce off the 50 because it went all the way back and closed up here. But if it closes down here and then comes back and bounces up, usually takes off. But you don't get into here. You don't really get into this trade until somewhere like right here. Right here. Let's see where we are here. No, they're both 10-second charts. So I don't know if this one's just so far out that. Anyway, if you watch this, but all you got to do is wait for it to come over the 50 and bounce, and then it takes off. And as soon as it takes off, you can see where I'm at. I don't know. You can see right where it is. But if you're sitting here watching it, you see it bounce down. You get in on this candle right here because you saw it bounce. You know it's staying down. Then it goes down, and then it starts to flush, and then it starts to flush here, and you just ride the flush. But you can see it only went to VWAP. Usually, with more volume, See, it wasn't even stretched out here by the band. It had gotten up here and got exhausted just from all the buying, and obviously all the buyers were done buying, and it hadn't stretched back up in here. If it stretched up into here again, there would have been another $2 or $4 movement here because it wasn't high enough to then fall through anything but 1.5 ranges if you look at it. So here's one range between the green and the yellow, and it was like halfway in between, right? So that's like a quarter, and then you got another 50 cents to here. Well, that's at the pre. Let's see where we are here. Right here at that time it started to go down. We were about 154. So we're stretched out about 23 plus. So we were stretched out to $75, somewhere in that range. Really close to $75. No. Well, the range was $75. Where it started was halfway through this range, so it was already low starting, and then it only went to the VWAP, and then went sideways for the rest of the day. It was over after this move. It was all over with. You wouldn't want to trade any of this, especially going up halfway through this standard deviation back up. It was 37. It's 18, it's $20 maybe from here to here. So that's $2 movement. So that's $1 movement from here to here if you catch all that. That's just it's nowhere you want to be. But you can see it had stretched out here, pulls back to here, goes up. It's trying to, by this time it's so exhausted because it's already up 100 from where it opened. Didn't it open at 70.40? No, it already opened at 70.90 or something. 70.90. So it's up 50 more dollars to here. 37. Anyway, that's what it does though. It will actually, but usually when it falls, usually on high volume days, not not probably such an up day, it will fall all the way to here to the second on a normal day that's stretching out, which is where you get these huge moves like 8 and 10 or 32 times your money. It'll stretch way out here where my cursor is, and then it will fall to this first lower standard deviation somewhere close in here. And when you come across VWAP for some reason in the Greek calculations, it's exponential. That's what caused this little spike right here. From here to here, these two candles is that cross against VWAP right there. If you look at that, see those two where it went across VWAP? That's what creates these really strong spikes. Now, had it gone down even further to here, shit, this thing would have been this would have been 6 to 10 extra money. Yeah, this could have gone up to $40 had this come down to here. Because you're what, 20, 40, $60 in movement. So that's $6 plus your Greek calculations. $6 plus how, gamma, how fast it's moving, blah, 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 and how far it goes. But it didn't. It was a good move. And that's what you look for is underneath the 50 and bouncing off the bottom or on top of the 50. This is kind of an unusual example maybe, but where it comes over the 50, bounces bounces and takes off. And that same, you know, you got 10 over the 20. So if you take the 9 over the 20 and price over the 50, that's where you jump in. Look what happens. Look what happened to your strikes, Ron, on that paper trade you said that you did. And just look at what's gone on since it bounced off the 50 on a 1 day chart on the SPY. Same thing. It takes off exponentially, and this is what Outlier does. This is the only place Outlier gets in is right here. He doesn't short anything anymore, and I don't know why, because he's lost a lot of money. He's blown up a couple accounts. I do know that from just listening to a lot of his videos. But he could do the same thing. Well, not in the long term that he does though. You can do this day trading because you can just watch. You get a double top up here, triple top, whatever, whatever you see here, as long as you never go a higher high over here, it's going down. But then you got to wait for the 50 because if it doesn't get underneath, see it's underneath the 50 here. But it came back across. So you could have traded from here across here to here, and that would have been a good move. And there's the double top right there. It wouldn't have been too good a move yet. Oh yeah, sorry. This is the 10-second chart. Sorry. Let me change to the 30-second, 1 minute. Usually I'm doing this on the 1 minute chart, but well, I watch the 1 minute chart for the confirmation on the 50 when I'm day trading, but I watch the 10-second charts because you need to watch them and see where it's going before it racks up three or six candles versus one candle. You really need to know before. So anyway, came down here across the 50. There's your first bounce. So this one would have been, well, hang on a sec. Let me get back to my 1 minute. Yeah, here we go. This one's kind of screwed up too, but it comes across 50. There, you would consider that. I would have considered that a bounce, and then it would have went like that. Both the order blocks, with the order blocks, and there could have been more red order blocks and yellow order blocks at that time because they got mitigated. I don't know which, but anyway, when you see it falling off a cliff like this, you just jump in. You just jump in right here, and even if you get in at $5, you still got $2 movement. All that matters is it goes up from here to there, right? And usually on the first move, usually with more volume, this would have gone, or, well, yeah, because the more volume would have stretched up here with the buyers. Had there been more buyers, it would have went down three different standard deviations ranges. And then it usually bounces back up to VWAP. And if it gets over to VWAP, it'll go to the first band and then it'll just consolidate, you know what I mean? It always gets less and less and less. So if you if you came up here and then you drop off and go 1.5 standard deviation area through the halfway through this one and then one more, it's not it then you can see what it does. It never gets bigger in the afternoon. So that's why you gotta look for this trade. And sometimes there's two or three of these trades, but it's just that it's fairly easy to follow. If it starts grinding up, you just wait for these order blocks to come on. Wait for the order blocks to come on. So you get in here. Even if you got in here, it doesn't really matter. You're going to ride all the way up to here, and then the strike's going to be pulled up, and then once it bounces, the strike's going to be pulled up even more into a solid footing, and then it goes up again, and then it goes sideways. It's usually only like these 2 or 3 moves that you get on an up day. It's only like an hour, hour and a half, maybe two. This one was kind of short lived. I was expecting it to go up, like this one and stretch up here, but it never did. So you just keep an eye on it because it will go up and stretch out and come back, stretch out, come back, stretch out, come back, and then it'll fall off a cliff. And it depends on where you got support, where you got buy orders, and this is where the buy orders were right there. See, it came right back to where it bounced going up over here. There's just a lot of orders there, a lot of buying orders there, but not up here. So, oh, that's a fair value gap. Anyway, that's the move of the day. There was a couple in here, and then this one, and this one I went to lunch, so I didn't catch this one. I went to lunch with one of my friends that he's trying to learn this too, so I'm trying to help him out. And he's lost a lot of money trading, so he wants to make some money now. But I left like I don't know 10:40 I think somewhere right in here. I missed this last move. Then I was watching. I'm like, oh, there's the move of the day, and boom, there it was. I'm like, ah, shit. That's kind of a screw. Well, yeah, that's the 50 falls off. So on the 1 minute, it just fell off. It didn't bounce back. It's a big candle. See, if you get in over here, see now, if you see this candle forming and it's going a long ways away from it, you got time to get in because see where the price is and where it is on the strike price on the left. You've got time to get in, and as you can see, I've been placing orders up here like this, so that if the price is here and it comes cruising past really fast, it executes the order, and then I can take this up and put this up here. So it'll execute the order going past the price, and then it rides it up. Then I take the stop loss and just keep the stop loss coming up. I think yeah, I did a good job today on the lately with low volume. I've been getting stopped out a lot, which it doesn't even give me time to even start up a video when I get into a trade. And I really I keep having to delete videos on past days because I got so much video that I recorded just to try and catch one of these that I finally got to the point where now I'm only starting up a video if I know if the trade's going to execute. So if I put an order in like this and keep working it down as it comes down here, as this comes down, 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 and I can see what's going on here, you know, it's coming. This is all coming down on the put. It's coming down on the put, and right there is right there. Right, the lowest point is the highest point over here. So you keep watching here, and as long as you don't get a higher high, then you know you're okay. But you got to be careful and keep your order above it because it can fall, and this can wick you in and start your order when maybe you don't want to have it. So you got to be really careful. But as long as you keep getting lower low, lower low, lower low, lower high, lower high, lower high, then it gets to the 50, and see the 50 was already up so high that it just fell off a cliff, dropped off a cliff. And as you can see, I'm still way down here. So sometimes I'll have this number set to the correct number of um, contracts, and sometimes if I see this, see that thing went. That candle opened and on the 50 went up, or no, It's red. So it started there, opened there, and closed there. Opened here, closed there. So that took 1 minute. That's a 1 minute candle. So you've got 1 minute. See the delay? See how far you went over here? You went $10. You went down $10. And over here, you only went $1, which is about right. That's actually correct. But if you keep working your order down here, if you see the price coming down, and that's another thing, you always get in and keep pulling your order back down like this and keep it above it. That's what I've been doing lately. It's working out well. I don't set a stop loss until I actually get up into here, and then I'll actually put up stop loss like right there. And I've been being stopped out, and if I got stopped out on a trade where crossing over the 50 or going back up the other way, because you can try this one over here too. That's staying underneath the 50. That's riding the 50 and the 165 right there, and keeps coming down. And then there's a 50 EMA fail. So it crossed over the 50 back underneath and hit the 9. So you know not to get in. You never get in. You gotta wait for a bounce and go up. Because if it crosses over here, then you gotta just don't do anything. Don't do anything because you're probably going to consolidate, and look what happened the whole time for that's the rest of the day. All it did is stay in that same consolidation range. So, but it's with the red and yellow and the blue and the green, you can tell where it's going. It's not that hard. You know, it's hard to learn the pattern here, but after 4 or 5 days, different days of trading this, you learn and you get the indicators coming in too especially on the 10-second, on the 15-second chart. You have these indicators, and you see the blue one come on here, so you know if you get another bounce to get in. Bingo. Then you ride it up. Then you just watch it and ride it as far as you can. And in here somewhere, there's 9.99. There's $10 right there. So it's only $1 movement, close to $1 movement on it. This, especially when it's bouncing up, you know, until it gets up to more where it gets more support and bounces up. The option is, it's not staying up. Every time it pulls back here, it drops and it drops and it drops and it drops. But then you get here and go up again, and then you get to here or a couple one candle afterwards is when your strike will actually be poking up. There's a delay between the SPX and the strikes also. So, you know. Anyway, that's all I got today.